Good morning, everyone. Microphone check, screen check. I know the Zoom side of things is working well. We had a little bit of, just a couple minutes of pre-game stuff going on. Not a ton, though. We should be good to go, though. Mic check, screen check. Yeah. Good. Welcome. Good morning, SSFTG family. I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the morning PDF, the morning prep PDF guide on the right side there. Very important to understand everything that is inside there. Just a quick note for you all before we jump on in today as well. If you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Welcome. All right. Just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. Side note, from the subscriber count, we are at, I think we've got another, I think we're under 10 more to go until the next giveaway. So we're right around the corner from the next giveaway. If you're not subscribed yet, or if your friends aren't subscribed yet, or whatever, make sure to subscribe so we can do that next giveaway on the road to the 2,000 subscriber mark. We're getting there on the YouTube end of things. I think, like I said, I think we've got less than 10 until the next one, so that should be fun. If you aren't a member yet, though, aside from the giveaway, you do have a few different options to check out if you're looking to further your trading education and career. One of the easiest ways is to jump in here on YouTube. You can check out the join button below the stream, which gets you access to our extended hours room, where we continue the morning room with a little bit less delay to the end of the session. YouTube membership also has access to the communities area, where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to the Discord chat server. Plus, you get the awesome badge next to your name here on YouTube to show your support, and it just looks cool. If you want to take a massive step further forward, though, in understanding our trading approach and what it is that we're doing here every day in the room, look no further than the Day Trading Academy. You can find that over on SSFTG. This is where you can learn how we do everything. But listen, this isn't a small little PDF guide that you're going to finish in an afternoon. There is a quick start course to get you going, but to really dig in like the Academy does, you're looking at about 19 plus hours of video course material. Along with the course, we have homework, study guides, and everything else along the way to really make sure that you understand what's going on and that you're taking full understanding while you're navigating the course, which I review personally as far as the homework is concerned. And you get the awesome DTA upgrade discount when you're looking to upgrade to the VIP side of things. And then we go on to the top floor. Speaking of VIPs, the executive suite, that's where you're going to find them all. That's the VIP side of things. VIPs have permanent access to everything that is SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, and everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire session, meaning that they're on the fastest connection you can get, and that's also where we do some of the pre-game stuff, without any delays, from start to finish. So whether you're here for the very first time, or you're one of these seasoned VIP vets over on the dedicated Zoom stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, some charts, and all that fun stuff, see what's going on as far as today is concerned. Don't forget to grab your morning DP levels. Those are posted for you on the major 7 markets. NASDAQ, S&P, gold, crude, euro, Bitcoin, and Ethereum. It's a race every time. As far as the news is concerned, we do have 8/15 ADP non-farm employment change. That's fun. That forecasted 695,000. Obviously, that already came out. The other news that we have for today is 10 o'clock ISM non-manufacturing PMI. That's forecasted at 60.5. And then we have the crude oil inventories at 10:30, which is forecasted at a negative 3.102. If we look at the API report yesterday, which generally gives us an idea as to what to expect for the inventories, that came out at a negative 0.879. So they're forecasting a negative 3, but, well, that's not what the numbers are telling us. The numbers are telling us that it's probably not going to be as bearish, as bullish as they're thinking it's going to be. A negative 3 million would be a fairly bullish number. That means that they've got a negative, 3 million less barrels of oil than they thought they had. So that increases the price, so people buy a little bit slower and, normal supply-demand stuff. So they're forecasting a negative 3, but the API is telling us that we shouldn't expect that. We should expect it to be a lot more bearish. Something to consider in the back of our mind. Nothing else really going on, though, beyond that. Starting off on the S&P and taking a look at what's going on over here. I mean, the S&P, this was probably one of the, and although I took it on the NASDAQ, probably one of the nicest textbook type swing trades that I've seen in an incredibly long time. Remember yesterday, you might have to go back and listen to the recording, but right in the morning we were talking about how a major trap zone would be under here. In swing traders, will have their stop under here. They know the probability of this trade sucks. It's not going to work very often. It's going to be accurate maybe 36, 37% of the time. But guess what? When you have a reward that's 4-1, it doesn't matter. I mean, that's what it comes down to. It's all math at that point. It's this gigantic rally to the upside did fire off, and man, did that thing just rifle all the way up to the ceiling. It didn't actually break through the ceiling, though. We didn't even actually break a new high. We're coming into falling resistance and seeing a little bit of pushback off of that. As far as a channel is concerned, it fits. Pretty nice. Looking at this from a corrective phase, then, if we go back a little bit further forward, we've got wave 1 into wave 2. Wave 2, arguably kind of gross looking. So wave 3 could be this jumbotron move all the way up to the upside, which would suggest that wave 4 is disgusting. It was. And now we've gone all the way back up to the highs. I usually like seeing a 3.8. It went to 3.6. Close enough. That's pretty good. As far as the corrective phasing goes, then, you would expect a move back down here. And now we're getting a little bit herky-jerky inside there. Possible trap low. Big reversal back up. So we had a small little wedge consolidation that attempted to break down against the prevailing trend. Swing traders took it back up and screamed that thing all the way back to the highs. We arguably haven't even had a wave 2. I mean, this thing has gone way far up, and if we look back historically, technically, it's still valid. Technically. So, I mean, maybe they start getting things going, but right now, more likely, the way that this is all kind of hanging out, we're in a range, obviously. But in terms of the volume perspective, this will give us a little bit of a clearer idea in terms of what to expect once it loads up. Okay. 43.90 is the POC, and man alive. We had an attempted drive back to the downside. They immediately failed back up. 43.90 is going to be a trampoline. That's the zone of support. It's right in the middle, which kind of sucks. It might have to go down a little bit further, but 43.90, that's a big spot. Over on gold, beautiful continuation up without me. Thanks, gold. Tried buying it. Closed out ahead of yesterday's end of day. I knew I wasn't going to be home for the rest of the day, and I wasn't going to be able to manage it or be around to manage it. So I closed the trade ahead of the open for a small gain, just to roll into today to see this. Ugh, man alive. Well, I mean, it did exactly what we were anticipating it doing. I had to take the safer route because I knew I wasn't going to be around, so I closed it out at a mild gain. But if you were able to manage it or hang on through the overnight session and you didn't mind that risk, it paid off. I mean, what a rally. Holy crap. Jumbotron move to the upside, jumping all the way up into the 1835s now and testing some of this previous resistance. We are at a positive 2 DP. I mean, usually a positive 2 DP would tell us that there is a likelihood in the 90% that the market does not close above this 1835. That said, there's still 6 hours left in the day as far as trading is concerned. 7 hours in the day. There's plenty of time for this to go a lot further if it wants to. And remember, probabilities, they don't have to. They're just probably. If it does start widening out, we are at the 2 DP. If it starts widening out a lot, you may have to modify these to 1 DP moves all the way out just to kind of compensate. Over on crude oil, we are seeing that bearish move to the downside, but again, we have that sneaking suspicion that the news isn't actually going to be as bullish as they're anticipating it is, and that bullishness or that lack of bullishness could be a great catalyst to use to our advantage. The POC is drastically underneath the market. If we bring it all the way further forward, we'll see if anything changed. Did a little bit, but I mean, not a whole lot. The POC stayed the same, but they kicked up a little more volume in here. You can see they exited. I mean, it's plain as day, right? It's about the most obvious thing on the planet here. The longs were long, and they're not long anymore. And if they're shorts, they re-upped their shorts, and they're still short. The market's underneath it, and it's still driving lower. We have every reason to believe that the sellers are winning this fight right now. And from the context situation of where we are in the bigger picture, we've got wave 1 into wave 2, and again, this is another one where wave 2 is really disgusting looking. I'm going to go down to the overall low, but with a mentality that this was nasty, we should see a sharp, aggressive wave 4. And that's exactly what it did. I mean, that thing just pile drove all the way to the lows. But it made a 0.98. And 0.98, typically, I mean, a 1-to-1 move is fine, but you'd really like to see it go a bit further than that. At least like a 1-2-1. That would be down at the 68.50s. Essentially, what this is saying is that the market still has room to potentially fall. We just have to see where the market on the bullish side of things is. And they're still underwater back at 71.15. So, I mean, the continuation down just makes all the sense in the world until we start getting down into like the 66s, 67s. As far as the movement down from a structure basis, we've got an L2, which rolled into another L2, and then they had a rep L2 early morning move down at 4 o'clock yesterday morning. Drove back down into another move, and now we're in L1s. They've already kind of exhausted their patterning, right? I mean, that's kind of done. Like L2, 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 now we've got an L1. Maybe they're picking up speed for a final blow-off. Looking at some obvious legs that do stand out, we have a very obvious impulse leg right here. So that leg will usually want to show up again somewhere else. It did, right here. But if it's going to show up again, it's right here. They've still got room. We saw this yesterday on the NASDAQ, I believe. Over on the euro, nice rally to the upside, still continuing back up. No pullback to the 18-100s, so that hasn't really changed. From a 60-minute perspective, let's see, we've got the POC from the top and the bottom. The POC last I checked was 18-100. Let's see if it changed. 18,715. So it did change. The 18,100s was the POC down here, but now it's actually shifted to the upside. We are breaking above some of those previous major structural highs. So this move to the upside and this reversal and the fact that the POC is now shifting up and the market's still staying above it, that's a lot of heavy bullish emphasis. We've got a lot going on here. As far as a continuation up, obviously that was like an L6 if there could be one. But they broke out above the highs into a deeper L4. That was that, if I remember correctly, FOMC snapback. That was also the retest of the 18,100 POC. But we've got that continuation back up after that L4. Usually the first pullback off an L4 is going to be an L1. The first pullback in this case dove straight through the L1 and dipped to the L2. It's understandable why these bulls are so hesitant, because that's not what should have happened, right? They ran into some problems here. So the L1 should have held. They're still holding the L2. It doesn't mean that the trade is totally invalid, but these weak responsive moves make sense. Contextually, probably freaked them out a little bit. So we'll see how they want to line up. At 18,715 is the POC. The market just broke back above it. It's starting to heat up. It's looking okay. From the 15-minute perspective, a lot of that movement on the 60 happened very recently, and we've got a full flip off of the lows. Massive reversal. Just straight up V-bottom, which means that there may be a flip into an L1 or potentially L2. It's not very often we get a setup on the euro. Partially my fault because the euro's so freaking slow. I hate it. But let's switch over to the NASDAQ and see what's going on over here. From the daily perspective, we've got some things to churn in here. The daily perspective looks like it would be incredibly bullish, right? Massively bullish. The other time frames that we've been talking about, they kind of confirm that, right? I mean, it lines up pretty well. So off of the highs with a 2.3% pullback, very statistically average based on what we've seen historically, and this sideways chop and slop. Usually the market gets stuck here like we've been talking about for a good week or two. That includes the top. But usually in a bull trend, historically at least, when we see this giant bear bar off the top in a stall, it grinds its way higher. So it is definitely buy low and work your way up. Look back historically, the last time we had a giant bear bar that went sideways off of the highs, right? Giant bear bar went sideways off the highs, and they went sideways for a good couple weeks before they inevitably broke down, even came back. The next time around, we had a very aggressive bear bar that was not off the top, right here. And we went sideways for a little while, jumped up, ground their way back up. And you can see the pullbacks are deep. They're coming back real far. Going back a little bit further. Strong bear bar off the top. They did have follow through. A little bit of a different scenario, but notice, same outcome. They ground their way back up. Going back over here. Massive bear bar off the top. Ground their way sideways for a couple weeks. Work their way up to a new high. It happens over and over and over and over again. Now, the way that it's going right now, look at what it's doing. I mean, it fits. It's perfect. I would rather buy a little bit lower because the pullbacks do make sense, so maybe not buying full boat up here. But, I mean, these swings on these dips, this is what we were talking about all yesterday. I tried buying into multiple times, finally got the stupid thing to go. This whole area, major zone of interest for NASDAQ. Now, looking at the 15-minute perspective on where we are, this is that dive down. I was looking at the 6.1 yesterday, but they actually made it down to an 8.5. 8.4. Either way, we have rolled back to the upside, and this is further confirming that this is still likely a rolling or consolidating wedge in an otherwise wave 4, looking for wave 5. Wave 5 is now broken back above 14,985. That's the POC for excess confirmation. The upside objective is going to be back up to the 15,150s. In full disclosure, I am not still long. I took the final exit when it was at like a 7-1 on the last portion because I didn't think it was going to go any further. At least going into the end, going into the lunchtime session. And sure enough, man, that thing just kept on going. I thought I was going to be able to get another pullback to reload in more. Shouldn't have exited in hindsight, but oh well. Now, where we are today, we're coming in off the backs of an extraordinarily bullish rally. And that bullish rally is going to have a lot of traders thinking, well, wait a minute, like, whoa, why, what happened, right? Where did this thing really kind of come unhinged? Where did they leave people behind? So if we go backward a little bit, the POC all the way back up to the top, we can see that obviously this POC is going to be up here. And realistically, that makes sense because the market spent almost no time down here from that measure. So we're going to have to go off of a confirmed basis from swing high all the way to the swing high. And that leaves it way down at 14,908. Yikes. Now, the spike and channel continuation that we've got going on right now, which is fairly clean, pretty straightforward. We've got our first attempted break below the lows. This is where, just like we were talking about on gold, swing traders are going to be coming in with stops underneath the next low and targets all the way back up to the highs. Likelihood of success, 37%, maybe. Reward versus risk, 2-1, sometimes 3-1 or more. It's worth it. So from a swing perspective, going smack into the open, we're going to be opening up directly on top of a floor, right? So if the market does crack down and break lower, they might be hunting for those stops underneath the 15,005. And if we say 15,005, why not just go to 15K, right? So we're going to be opening up on the floor as it stands. POC is down at the bottom. We've got about 11 minutes until the open. We still got some time. Looking on the S&P pre-market, which is not something I typically do very often, but we've got a lot of volatility here. The morning continuation that we've got going on, nice initial drive lower, lower high. We can see what they're trying to do from a transitionary standpoint, Elliott wave style. We've got the A to B, or wave 1 to 2, and now the continuation lower. So far, we're at 1.5. So if they want to go down a little bit lower to the good old fib numbers, 1.61, I mean, it's like 3 ticks away. So 43.9650, and the low they made is 97.75. 5 ticks, sorry. That's a situation where it's like, okay, maybe good enough. The next important task here is that they have to stay underneath here. and look for a continuation back down for the next wave. So maybe the S&P is creating a 5-wave structure to the downside. I think more realistically, if we use our heads a little bit and zoom out to what happened yesterday, we've got this jumbo move to the upside, wave 1, disgusting wave 2, strong drive up. Might be wave 3 into wave 4, because again, disgusting wave 2 means wave 4 should be fast. Decisive. It was. We roll all the way up to a 7-8. It fits. It's very shallow pullback, but the minimum that I'm looking for is at least 0.21. They got 2.7. Good enough. So the way that this stands, now that we've got a rotation down, it's more likely that this is in a corrective phase. We know where we are now. A to B to C, but it doesn't have to stay underneath this low. If this is a 5-wave correction, we could easily just look like this, where it just doesn't do much of anything. And a higher low would be a fantastic starting point for a new impulse to the upside. Very interesting spot here. As far as the 5-minute perspective goes, we are, again, we're going to be opening up basically right on top of the support. We've got the spike in channel from yesterday, and current price is this dash line here. The spike in channel low is there at 95.25-ish, 50. Three continued pulses to the downside as we navigate into the open. Keeping in mind 14,985 is the POC that they're leaving behind. On the 15-minute, at least. Yeah. Well, we'll see what they're able to do so far, but got about 7 minutes or so until the open. Market's trying to find a bit of a base. I like this area going into the open off of this POC rejection, but it's early. I didn't get a fill. Wow, even pre-market, I'm not getting filled. Awesome. That's a great start. Okay. Well, I was trying to get a fill down a little closer to that completion of the third leg down in the trap on the base, but no fill. Let's see what they want to do. $260-ish ticks left on the candle. There are a few, excuse me, there are a few concerns going into the open in terms of a rally up. Settlement's right there. So a jump to fill settlement would make sense. We're already looking for potential longs. But, you know, the way that this is kind of moving still hasn't necessarily proven that the bulls have taken over quite yet. We still got lower highs, lower lows. It would be nice to see, you know, at least a little bit of a jump to the upside. The problem is if they do it at the open, they might not come back. Let's see what they want to do. Going sideways, we are at the completion of a major 3-press leg to the downside. Measured, straight down. Nine SMA 30. Not that I know of. I mean, that's the typical 930 cross setup, at least. With the WMA. I thought it was a 9 EMA though. Isn't it? 930 trading strategy. I mean, it's so popular even Google knows it. 2 moving average. Yeah, it's a 9 EMA. And a 30 WMA. That's the only difference. Any other moving average ones that I take, I mean, you know my stance on moving averages. They're nothing but averages, and I treat them that way. But when it comes to them as like weighted versus non-weighted, or if I cited a different moving average, I mean, it could have been a random one. My charts still have the random moving averages that we loaded on like 2 years ago. The other one that I, aside from the 21 and the ones that are on the screen, which I don't even know the numbers off the top of my head. Was it 112? 116, 68, and 34. Hey, Ace, how's it going? Yeah, there you go. 14 folks watching. Let's hit the like button. Slap it. Maybe not if you're in a trade, though. You can wait. You can wait a second. We've got more bearish continuation to the downside. Next major time slot is going to be 928. We do have a nice continuation back to the upside. We've completed the 3 waves to the downside. Like to see maybe if 928 can get that last jerk to get the thing going. Got the open right around the corner here. Settlement price just hovering, which means that they're basically going to be opening up on top of settlement. Good momentum up. So this is the extra proof that I wanted to see, but, you know, again, the concern is that we're going into the open. It might not pull back. That's always the problem, you know? $928 hits, a little bit more bullish continuation to the upside. I tried getting filled down there, but I couldn't get it. And it was only one contract, so I know I would have already been out by now. Minute and a half until the open, right around the corner. Continuation to the downside because, excuse me, hang on one second. There. We do still have to pay attention to the downside. We've got a bearish L4, which typically responds off of an L1. It did. It did respond off the L1. It got it. More continuation to the downside after that. It hit a... Ooh, that's dirty. Technically, that was an L3. It never physically tested the L4. Nasty. L3s usually follow through with L1s. It did. They followed down to another new low, and that's where we are now. Yeah, I'm in the same boat, Steven. Every time I play with the open, it's like that's when it decides to be a flamethrower. And in the times that I don't play with the open, that's the time where it's easy peasy. It's Murphy's Law, man. I don't know. I don't mess with the open. Unless I can get a trade, like the one that I was trying to get in earlier, because I did try to buy down there. We still had like 8 minutes left. You know, when there's that much time, there's still room to get it going, but... Oh, lordy. We obviously hit the open. I think that's safe to say. I'm going to look to grab this little snapback here for the scalp back up. We've got a lot of volatility. Sorry, let me get the order in there. We've got a lot of volatility going on. I want the deeper pullback given where we are right now, but it makes a lot of sense given the back and forth that bulls are scalping this thing like crazy and shorts are stuck. They know the situation. They want the pullback, but they also know that it might not happen. So it's a catch-22, you know? You got to be fast. This market is ripping right now. Holy crap, this thing is ripping. Jeez. All right, strap the gas pedal. Let's go. Oof, that was a big flush back down towards settlement. Lots and lots of jerk. Lots and lots of jerk around the settlement price. I'm going to reduce a little bit. There's that pop back up. Holy hell. Wow. Whoo, we got the gas pedal down today. Break back above the 45s. Starting to rip back higher. There may not be another pullback. Yep, there we go. I was going to say, there's not going to be a pullback with that kind of aggression. There's so much volatility right now. Let me get in a little closer here. Jeez, oh Pete's. We've got more bullish continuation rifling back above the 15045s. And again, the reason why there's so much of this is because of how big of a trap took place on the 15-minute. Right? This is a massive pullback zone for buyers, and sellers know that. If they're stuck short, they do not want to be short. Nice pop back down into a major volume node. Previous POC zone, beautiful dump back down here. I'm going to reduce risk just a little bit on this pullback. We got a metric ton of volatility going on here. Starting to push back down towards that settlement price. Back off towards the POC again. And immediately dove under. I'm going to take the exit at break even on that slide back down again. I wanted that pop up to follow through, and it's just not. Going from the top to the bottom, and again, this is what I've been talking about. We're stuck around this 15050 POC. If we move this a little bit further forward to where we are now, it's still the same spot. They're having trouble. I want to go long here, but it's just right in the middle of everything. Beautiful pullback for a continuation. Rifle back to the upside. Jeez. Okay. We're breaking back above the POC area. Ooh, that was an absolutely horrible fill. I'm going to try to reload a bit further down on this. I got just a really, really bad fill on that dip. More continuation back up. Looking for a further break. There it is right there. Beautiful jump. Wow, wow, wee, wow, I hit the gas pedal. It's only 3 minutes in. It's only been 3 minutes. All right, bulls have a serious amount of conviction going on here. Big breakaway move, continuing back to the upside. Shorts are massively stuck. We already know that. But the POC is back at 15050. Maybe they averaged up a little bit. It's still in the middle. That doesn't help. But the bulls are getting that breakaway momentum. Wow. I was not fast enough to respond to that, but that was a really nice washout. I mean, that happened in less than a second. Beautiful washout. I can't do anything about it, though. Got bottom bid and couldn't get a fill on the next washout. Cool. All right. Starting to poke back into the 15050s. That's a heavy bear bar coming down here now with more conviction. Careful. Can the bulls re-up back above the 50s? Whoo, lordy. What a bull bar. I can't focus on the... I know, right? Who cares about the S&P right now? Look at the NASDAQ. Would you look at this? 15,050, buyers are losing their grip underneath that low. That doesn't necessarily mean that the bulls are done, but it could mean that they're looking for that deeper pullback. The 14,985s is that bigger zone. The first 5-minute bar is done. We've been trading for 5 minutes now. Whew, lordy, I feel like I've been trading for 20. Looking at the first 5 POC, 44.01 on the S&P. And what do you want to bet? It's right up at the top on the NASDAQ. That was not the first 5-minute bar. This is the first 5-minute bar. 15,045. Back up to the POC again. Bouncing off settlement. Whoa. Holy crap. Did you see that bear bar? That thing showed up out of nowhere. Did someone just market sell 400 contracts? What was that? Actually, it'd have to be 500. It's a 500 tick chart, right? Back up to the POC again. That sell candle had no follow through whatsoever. Let's see what they're able to manage afterward, though. Man, I have a really hard time believing that shorts wouldn't have taken that attempted short to the downside to try to get a trap going. I really like that for a continuation pop to the upside. That bear bar showed up so fast that a lot of sellers will think the bottom's going to fall out of this thing, which allows longs to utilize that to their advantage for another continuation back to the upside. Market's going a little bit slower, but I think this move back to the up here makes some pretty good sense. I think shorts probably saw that bear bar. They tried getting into the short, and so far they're not doing so great. Big flush back to the downside. That could be the perpetual start of a larger move down, and it's not worth the risk holding on for full size. I would rather lighten the load and see if they want to get that as a final trap before they go. They're still maintaining these higher lows, so I would still like to try to keep the long going. But knowing how herky-jerky this market is right now, it's not worth holding on to too much risk. Back up to the POC. Closing above it. Quick snap. Keep on going. Attempting to poke underneath the lows. I didn't get a fill on that dip. Crap. All right, well, my objective is up here, so I have to take my target based on the 2-to-1. I really tried to add another one so I could keep a runner going, but I've got to take my target at my 2-to-1. I mean, I've only got the one contract, which means that it's going to keep going, right? But I tried. Man, I tried. Bulls still trying to peel this move away to finish off the 5-wave structure. S&P is getting a little bit bearish here, now going below the 5-minute POC at 0.1. It has shifted now, the 15 to 0.150. Ooh, man, I got a terrible fill on that. I'm going to immediately jump out of that. I hit the bid when it slid down towards 50, and I got filled at 52.50. That's 10 ticks away from where I wanted it. More continuation. Again, another terrible fill. Right back down to retest. Beautiful cycling. Big pulse to the downside. I'm going to look to try to draw my average more down towards a reasonable point of interest for the continuation up. Market's still jerking around these 50s. I'll play it safe again. Fine. Wow, there's a lot of volume coming in. Holy moly. Jumbotron bull bar back to the upside again. S&P is still finding some bearish potential, trying to drive lower underneath the previous bear bar's low. Couldn't get a fill up at my objective, so I'll take it there. More bullish continuation. Extremely active morning so far. The volatility is through the frickin' roof right now. Another bullish break. This one's a little bit higher because this is either going to be the start of a strong move to the upside that gets the jump going, or it's going to be the failure. I like this area with that mentality for the risk-reward potential. Big flush back towards the POC. They did snap and fail off of that area, so we've got to play this zone a little bit carefully. It didn't give me the response that I wanted, although, like I said, I still like this area for the longs. Reducing a little bit more. Reducing a little bit more. They're not following through. Nice little push back down towards the lows, which will allow a bit more flexibility for the longs. But given the perpetual failures that they're struggling with here, it's fairly obvious that they're running into some issues. So if the bulls are going to take over, really would like to see the bulls sweep this thing back to the upside super aggressively to kind of finish the job. We're back to the POC at the 50s. Back to the 5-minute POC as well. Looking at the developing POC, we're under it at 50. Which, I mean, isn't a surprise. We know 50 is there. I'll take the exit there. It's running into resistance on the bottom side, and we're staying underneath the POC. They've got to climb back up. And remember, the reason why I'm exiting a bit more aggressively on this one instead of trying to hold on is because my intention was buying up here for a continuation break, and it didn't. So, we've got to be realistic here. I still like it for another shot to go again, but we've got to be realistic here as well. We're in the middle of a range, and I'm not going to put on more than like one. We're a lot more beneficial trying to buy a low breakout down to like maybe settlement, and if that starts failing down there, then we could be looking for that continuation down to the 985s. Nice continuation further up. Once again, I didn't get filled at my target, so I've got to take it a little bit earlier. Man, all this volatility, it's great, but it's really frustrating. The first 15 minutes on the S&P have done essentially nothing. Couldn't make a new high yet. The previous swing high is 67. They got close. Number of entry and exit points in your charts. Yeah, lots of scalping today. Heavy activity. And you can tell based on the way that I'm entering and exiting, I'm just playing the volatility. That's all I'm doing. I'm not taking any trades that are based on anything other than psychology in these moves. Because there really isn't. Not unless we're at the extremes. Then the biases start coming in again, you know. But when we're in the middle around these major areas, it's just there's so much volatility that if you're able to play it, there's a lot of potential in there. There's also a lot of potential to get your face ripped off if you're not careful. So that's why I'm so quickly exiting. Like, try to get a fill, couldn't. I'm gonna have to take it a little lower. I'm quick about getting out of these things because it's just a second and it's gone again. As far as pattern setups or any type of trades that are of reasonable interest, we don't really have anything until the 985s on the NASDAQ. The setup was yesterday on that dip, which has been continuing into today. You know, I mean, it hasn't stopped. So sideways makes sense. 15-minute, well, actually, we're going on 20 minutes now, but the S&P POC is at 4401 and trying to crack above it. The bulls made kind of a new high, I guess. Looks like they're dumping into a bull trap. That could definitely be the case. The bulls just, they're not getting anything going. Every time they try, right back on itself. And now this. Look at this sequence of bars. Yikes. I don't want to buy into that. Not unless it extends way far down. And even then, it's got to be backed by settlement in order for the probabilities to make sense. Going across the field here, we've got gold, which is just rubbing it in the salt in the wound there. That's nice, thank you. The euro is continuing further up, still no pullback. L1 pullback is the anticipation. L1, L2 is the zone really, but L1. Bearish continuation down, strong bear bar. We're right on top of the POC, you know, perfect spot. Still seems like we're in a sideways cycle, and all of this sideways is still making higher highs, higher lows. Just throwing it out there. A measured move down in the short term would put price right at settlement. And the full measured move from the larger piece from before puts it in the exact same spot. So that's where things make more sense from an actual, like, trade setup. Low probability, but realistically, if you're looking at something along the lines of this for this. It looks like it's more than 2 to 1. Yeah, 3 to 1. Finding some resistance off the previous bottom of the channel. Remember, this channel is from the larger spike in channel formation that goes into yesterday. So the reliability of that is definitely questionable. Looking at other things that are happening today only, I mean, we really don't have anything. Like, I guess this. And then what? Like this? We just don't have a whole lot to work with structurally today so far. $9.50, we've got 10 o'clock news around the corner. Volatility definitely has dried up, and so has my scalping, as you can tell. Although there is still, I mean, bear engulfing candles still showing up, you know. Sellers may jump in underneath that. Yeah, now it's the S&P's turn, right? We have the POC shift to the upside on the S&P in a jumbo bull bar. I mean, obviously they're long. 4401 would be the assumption. 2 to 1 objectives would be what traders are hunting for. Nice little slide down into this zone of interest. Not getting the bounce that I wanted, though. I'm going to take it with a small scalp. With this amount of volatility, I want that to bounce and then pop, right? I don't want to sit here hovering around, dinking around at this level. No, thank you. I want this to be a break-even exit. If it's a break-even exit, it should respond immediately. Like that. Rotten freaking. What's that? Oh, Simpsons, where he keeps hitting himself in the face with the rake. More continuation to the downside. Driving lower, driving lower, driving lower. Sellers are hunting. Now remember, we're breaking off of the top of this failure side, so looking at the lows of the current range now don't make any sense. The 20s, I mean, they look good if I ignore everything that happened before, but that's it. Like, that's the only thing, so it's got to be low probability if you're going to be buying down here. The probability just sucks. Very much more likely that we continue down towards the 985s. This last slide down through here and this continuation and perpetual failure demonstrates that the bulls have lost their grip. If they crack the low, it proves it. That's like the nail in the coffin, if you will. Look how close the S&P got to that 2 to 1. Oy vey. What, 06 and it's at 650, 2 ticks away? That's a John trade if I've ever seen one. Jeez. That's why I front run everything. This is the kind of response that I wanted to see and why I exited so quickly. This is the response that I wanted to see there. If this was a break even, it should have been a V bottom, gone. Like, not hanging around. Big bull rally to the upside, but in context, this almost feels like this is a break-even jump back up that they're trying to get. The POC is at 50. I mean, that strong of a bull rally is really tough to sell into, but that kind of bear bar makes it a bit easier, I guess. Still haven't made a new low. What's interesting is it's almost like this impulse leg showed up again. Yeah, it did, down here. I didn't see it until just now, but the larger impulse leg is the one that showed up and confirmed. I was too absorbed in the smaller one. Nice job, Ace. Good work. Secondary bear bar to the downside will be getting sellers in, but I'm significantly... I didn't get a fill. I'm less interested in selling way down at the bottom of this candle. I'd much rather try to get a better price for a continuation pulse. If the sellers are not going to take it lower, though, this bear response should be met with some pretty aggressive bullishness back up, and then we might be dealing with a bit of a trap. I'll lighten the load a little bit for a continuation back up to the 5-minute POC, increase the flexibility. And here's that jump back up to the POC. I didn't get a fill. Oof, big rifle through that POC, though. This could potentially be the starting point of a significantly larger rally back up. They've only closed once above, so I'm going to lighten the risk a little. 2 closes above makes it a little bit more difficult, and that could potentially also kick in the starting point for a bull rally with shorts getting stuck on that higher low. I'm going to look to utilize that as a reason for a potential area of interest, depending on how they want to set up here. I'm going to get significantly more aggressive on this next pullback, though, because I love this for the rally up. Shorts are incredibly stuck with that rifle back above the 50s. I really love how this looks. This looks fantastic. The shorts are in such a horrible spot right now. It's not very often that I'll go full bore reversal. But in these types of contexts, it ends up a lot of times being worth it. What was that gap down to the next candle? Maybe a pulse to try to get the 50s. If this next candle's bullish, that gap down and a bullish bar back up makes that like basically game over. Nice continuation down back to the POC. Now, from the bigger perspective, right, and this is kind of the mentality, we're looking for the upside continuation for the completionary move up towards like the 150s. From that perspective, I'm maintaining this more from a scalper's mindset, trying to get some more runners to get going. But the objective is to get back up to the highs right now. So we've got a little bit of wiggle to play back and forth with. If they close below the POC, what will happen in the ES 4401? That is going to be a big zone of a lot of interest, because really that's going to be the attempted launching point for the settlement run, right? I mean, that's what the market's kind of looking for. Hang on a second. Got a big run to the upside. I got to make sure to take some profit in this rally. But in terms of the S&P and the way that it's kind of setting up off this POC, it's lining up really well still. Like, there's nothing suggesting that the shorts are anything but stuck. I mean, they close underneath it once, right? And then immediately back up. So I still think buyers are accumulating this like crazy to get that final leg. It's just, man, this thing is vindictive. I'll lighten off those first few in favor of attempting to try to get a better fill, but if this is going to break away, then I don't want to be flat, that's for sure. They look like they might be starting to break away. Reloading in this dip with the assumption that this news is causing a little bit of a pullback that we can use for bulls to snap up. Oh, and we are going into 10 o'clock already. Holy crap. So I guess get those final questions in, and then we'll roll into training time already. That happened fast. The only other one that is setting up is the euro, which we're finally pulling back to this L1 zone of interest. Upside objective for that would be up at 19,040. I didn't get both fills on the euro. Okay, well, the euro is looking for 19,040 at the moment. We've got more herky-jerkin going around here on the NASDAQ, but again, the way that this is setting up from the longer-term perspective, I really like the way that it looks, but the breakout attempt above the highs seems to have been a failure, and they might be utilizing this flush down to get a lot of orders built in. So I'm going to try to finesse it a little bit in terms of exiting and then immediately entering again to draw my average down. I still want to maintain the same position size, but I want a better average, and I'm willing to accept the loss initially to do that. They're holding that 50 area. I got to see them get back above that, and we should be good to go. They're still fighting. Good movement so far. Again, we are after 10 o'clock, and I still want to try to maintain my long position for a larger move back up towards the 15,100s to 150s. But the way that it's moving around here is incredibly vindictive, so we've just got to make work what the market's letting us make work. As we go into 10 o'clock, though, if I missed any questions, feel free to shoot me an email. I'll get those questions covered for you from there. Otherwise, though, I hope you had a great day of trading. The volatility was ludicrous today. If you had no trades today, honestly, I can't say I blame you. The volatility was ludicrous today. You have to take on an immense amount of risk if you're going to be trading in an environment like this. Hopefully, that's been apparently obvious on so far, but that's the type of day that we're dealing with. So, if I miss any questions, though, as we go into the extended session, let's transition over. Feel free to shoot those to me via email. I'll get those covered for you from there, or drop them in the comments below. Until the next one, though, enjoy the rest of the day. Rest up, and we will see the rest of you back in the extended session. Otherwise, we'll continue on. So, talk to y'all later. Have a good one. Thanks.